Happy Monday, traders. It's 8:01 a.m. Chicago time on the 10th of December, 2018. Thanks for joining me again on another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market is slightly off. We see risk off in crude and in the DAX. The British pound getting pounded, no pun intended, on Brexit talks. A lot going on tomorrow in the vote that's taking place in the UK. But we're seeing mixed sentiment, except for the Euro stocks, DAX, British pound, and crude oil. We're seeing kind of just risk come off, but only slightly. The ES the ES from settlement is only down half a point, and the leader today is the U.S. dollar up 24 and a half cents or 0.25%. The U.S. bond is up 2 ticks, and the Russell's up 2 ticks. So overall, not much movement from where we left things on Friday. Hopefully, you can hear me loud and clear. And as far as what's likely to drive today, we don't have much on the calendar remaining. Much of the releases this morning came out of Germany, the current account trade balance, and the UK had a bunch of releases: index of services, industrial production, visible trade balance, manufacturing production, construction output, and GDP. A lot coming out of the UK this morning. What's ahead of us and what's left is the U.S. job openings. This is a listing of the number of jobs that are unsatisfied or unfilled. The prior 7.009 million or something like that. Not much on deck. Not much on deck in terms of the calendar, but geopolitically, or mostly politically, there's a lot going on. The UK Parliament the Brexit Parliament vote still on for tomorrow, December 11th. Prime Minister May faces certain defeat. Leadership challenge could emerge. Myriad of scenarios remain on the table after tomorrow's vote. The European Court of Justice ruling on the reversibility of Article 50 stated that UK could unilaterally revoke Brexit. ECB decision on Thursday. Blah blah blah. And then so that's really what we have in front of us, and that's why the pound is down over 1%. Let's take a look at what we talked about on Friday versus what we actually got. On Friday, the primary scenario was for a drift down, looking for responsive selling to find a base. The base was expected at about 26.74.75, and I was looking for it to mount and attack higher, to continue what it started on Thursday. That didn't work out at all. Remember, Friday we had NFP. The secondary scenario was the one that worked out. We pushed the secondary scenario, was looking for a push to 27.11 right here, the stock zone, 27.11, 27.11, and an impulse down that brings us back to responsive and back into balance. What it actually did was it did exactly this, and it impulsed down, and it continued down, and then it actually tested all the way down to just above the low. And so here's what Friday looked like. 27.0975, missed the 11 by 5 ticks, and then it rotates back into the range. We have a strong push down, range extension down. Note that Friday did not touch the mid. The mid is this blue line. So just a runaway sort of play there. I generally do not play breakouts. unless it's on news and I get the news early enough. But overall, on Friday, the pullbacks were not very deep, so you had to be a little bit aggressive on Friday to hop on this train here. And so we pushed all the way down to 26.23 and a quarter down here, with 26.21 and a quarter just below, being the low of the prior day. So on Friday we put in a higher high and a higher low after breaking lower on Thursday on a gap down and fill. Remember, Thursday was a huge gap, and we ended up filling the gap zone before closing. That to me, on a neutral extreme higher, that to me looked like um, buyers were definitely seeing prices down here as advantageous and have jumped in to take advantage. And then all of that was taken back Friday. If you recall, Friday's non-farm payrolls missed, and so that's what we've got. What we had into Friday. Looking at the overnight session since then, so we closed at 26.35 down here. We gap open to 26.23 and a quarter, and we test lower low to continue this trend down. Friday was definitely a trend day. You can see that the point of control on Friday was the lower end of the range, the lower quartile. It fits all the definitions of a trend day down. We test back up, and then we mount an attack on the European Open. We mount an attack up into Friday's range over the point of control. We're trading right on top of Friday's close, and the point of control area. What this is showing, however, is that multiple distributions down below and a lot of volume in the overnight session, 310,000 contracts. So fairly active overnight session, and multiple distributions in this auction are indicating that there's no consensus, and that the market is actively seeking price out, seeking value out, which means that we're likely to see an open that continues that exploration. What have we done in the big picture? Here's what we've got in the big picture. It's just really, it's a clear indication to me that that the buyers are just not able to hold on to these higher prices. Each one of these bounces have been a dead cat bounce, and with lower highs, and it's pretty aggressive. I mean, a lot of this is news based, but the market, once the news subsides, we generally go back to the SOC, and we resume technically or fundamentally where we're going. And to me, this just looks like we cannot get off the bottom. So to me, this is becoming a fairly weak low at 2603. At 2603, we're not able to come off of it. The overnight low is 2610. So we are only 7 points away from the low that we put in earlier in October. So it's not looking so hot for buyers, but overall we're in this balance zone right here, and we're against an extreme. So unless this thing finds fuel, sellers continue to find fuel to push lower. We have bounced from these prices fairly consistently. We did so on Thursday. We've bounced back up. So my hands are off on the open to see which side is participating a little bit better, which side is actually gaining a little bit better. If you look at the volume scope from these recent moves this morning, the volume scope is just saying that is simply indicating that. Wait, what's going on here? The volume scope is indicating that that it's relatively thin. You look at this run up, 6:30 my time, Chicago time, fairly thin, and then it takes it all back most of it back and comes right back into this zipper, this large zipper balance here in the overnight session. If you look at the if you look at book map and look at the order flow and the heat map, when we zoom out, it seems to be fairly positive. You see that CVD, this volume breakdown indicator. Whoa, what's going on here? Let me lock this down. This volume breakdown indicator down here. Hello. Can we draw or what? Okay. For some reason I cannot draw. Cannot draw. Let's see why we can't draw. Sorry, 1 second. Let's see what the deal is here. Pop. That's a bummer. That's funny. It's just shifting this whiteboard around. Okay, well, the whiteboard isn't working on this one. In any case, we have, if you look at the bottom pane here where there's a green line, this is the CVD, the cumulative volume delta. And what you see is from the open, it's quite positive. It hit a little bit of red right there on the bottom third to the left, but overall it's just really positive, and it looks like it's rotating up pretty well. So quite a few pops throughout the morning, and it drifts down and it pops up and it drifts down. To me, this really portends a fairly noisy open. I expect a relatively noisy open this morning, so I'm just going to lay off of it and just let it kind of build what it wants to build before I decide to hop in with cold hard cash. Remember, our job as traders is to take risk, but also do so when it makes sense, when we have an edge, right? So I'm going to wait to see which side is actually pushing better before I hop in. So what do we have today? Today on the open, we are opening, and this is another reason why I'm talking about it being fairly choppy. We have a weak low on 2 days, Thursday, Friday. We're opening against the point of control. This is a somewhat of a B-shaped profile, somewhat. It's kind of a distorted B-shaped profile, indicating a potential long liquidation there against a low, against a weak low. To me, this looks like uh, against the prior point of control, it looks like it is likely to be a fairly noisy open. So I'm expecting this to bop around and trade choppy on the open. And then the problem is that both scenarios are equal here. So if I drew a line, it's really a coin toss on whether the primary scenario is one that tests higher and breaks down, which would move with the most recent auction. So I would expect the market to attempt to move higher, but I expect the impulse to go down, push into this point of control overnight, and then attack this overnight low. That's my anticipated primary scenario. 2610 is a low volume node, a composite low volume node. And that's what I would expect, a test higher and a breakdown. But really the secondary scenario just starts the same as the first, but then makes an attempt down and then impulses up. So we test to see what is underneath Thursday and Friday's range, and then it starts to push itself up, and I'm looking for a target of 2666 from Friday as the potential target to the upside. If we do get extended, I'm looking for 2700 again, 2698 to be the next key area up, which is right here. Okay, so if it does move higher, now on scenario one, if this 2610 area doesn't hold, which gives us just a small range, then you're looking for an attack at 2603. Below 2610, I would not get long. I would not get long. You're there. It's likely to gun for 2603, and we're likely to see a pretty decent amount of selling below there. That's been the low for quite some time, for about a month and a half now, and it's likely to have a lot of protective stops underneath there. Anyway, I'll leave you with that. Good luck today, and I'll catch you tomorrow morning. Okay? Take care.